What is up, everybody? Solomon here. I hope you guys are all having a fantastic day. Well, still making these videos. I can't remember the last time that I did a few to kind of ramp out the week and then did one on a Monday, but here we are. Notable news coming out all across the board as usual. You've got BlackRock and iShares essentially putting out an investor document talking about the adoption of crypto assets outpacing the growth from mobile phones and the internet. So the time needed to achieve 300 million users for mobile phones, it took 21 years. For the internet, it took 15 years. And for crypto, it took 12 years. Talking about demographic patterns, global shifts and trends such as inflation fears, political division, banking and fiscal concerns, and the future of finance, continued digital transformation. Notably, I'm pretty sure that this started maybe 2 or 3 weeks ago. I'm pretty sure it's BlackRock that's been putting out, and this is on just TV, commercials around digital infrastructure, which, digital assets and blockchain and distributed ledger or decentralized ledger technology certainly playing a role in that. But this is a pretty crazy statistic that has been kind of floating around the Twitter sphere today. The adoption timeline of mobile phones versus the internet versus crypto 12 years. And yeah, found this pretty interesting. You can see, BlackRock putting out a number of different documents. Bitcoin within an exchange traded product wrapper helps more investors get exposure to digital assets. Certainly just scratching the surface with digital asset exposure. Also, Pantera Capital putting out the year ahead in crypto document. I'm kind of curious because I haven't read these yet. Predictions for 2025. Rising trends. Real world assets or RWAs, excluding stablecoins. So if you guys missed the video I did a couple days ago about app.rwa.xyz, it shows you all of the tokenized real world assets right now. You can include stablecoin. Obviously, you get up into the hundreds of billions of dollars if you include stablecoins. If you exclude stablecoins and just talk about tokenized real world assets, excluding the dollars, obviously, you get into like $15 billion on chain, which, as I mentioned, I believe is a total drop in the bucket. But one of the rising trends coming out of Pantera saying real world assets on chain increased by over 60% in 2024 to 13.7 billion. Around 70% of RWAs are private credit, and most of the rest are in T-bills, treasury bills, and commodities. Inflows from these categories are accelerating in 2025, may see the introduction of more complex real-world assets. Private credit, trillions of dollars worth of T-bills and commodities off-chain, which they believe will come on-chain, I'm assuming. And the current extent of RWA being limited to these basic products, but the infrastructure to mint and maintain RWA protocols has drastically simplified, and operators have a much better understanding of risks and appropriate mitigations to come with on-chain operations. So more RWAs and more types of RWAs. I agree with that. Bitcoin FI instead of DeFi. So Bitcoin enabled DeFi, which I certainly would expect this to ramp up as well. But Bitcoin native finance protocols do not require bridging. High returns, high Bitcoin prices, and increased appetite for more BTC assets. Runes, Ordinals, BRC20, 1% of Bitcoins will participate in Bitcoin FI. We have seen a lot of scaling solutions and layer 2 solutions on top of Bitcoin. I would not expect that to slow down. Fintechs become crypto gateways. Agree with that trend that's been happening for years. And obviously, the more regulatory clarity that we get, the more this opens this up. I actually would say that you're going to see a lot of crypto companies that are native crypto companies kind of taking on hybrid fintech roles as well as we see more clarity, kind of becoming a part of that middleware between regular traditional companies and just pure crypto companies. I think Ripple's certainly going down that path. Unichain becomes a leading L2 by transaction volume. Okay. NFT resurgence, but in an application-specific way. NFTs were meant as a tool for crypto, not as a means to an end. Being used as a utility in on-chain gaming, AI, etc., identity, consumer apps. Restaking launches, ZKTLS, bringing off-chain data on-chain. ZKTLS uses zero knowledge proofs to provide prove the validity of data from the Web 2 world. This new tech is yet to be fully implemented, but when it hopefully does this year, it'll bring new types of data. ZKTLS can be used to prove that data came from a certain website to others. Currently, there's no way to do this. I mean, okay, I get it. But at the end of the day, I mean, maybe there's something more to this, but I mean, this is the same value proposition that we've heard. I don't know if this is just a rebranding of similar value propositions. I mean, the Web 2 data, proving provenance and authenticity and all this stuff is what a lot of these networks have been talking about doing for forever. So I might have to look a little bit more into ZKTLS. And then obviously the kind of the big one that ties all of this in, and we'll see it here in a second through OECD, talking about tokenization and some of these other entities, is the regulatory support and the compliance aspects, right? We do need clear-cut regulations and a clear rules of the road, or at least somewhat, for this innovation to truly flourish. More on that here in a second, though. But interesting predictions coming out of Pantera. We see OECD, if you're not aware of who OECD is, or the Organization for Economic Cooperation and Development. It's an intergovernmental organization promoting economic growth, prosperity, and sustainable development. Obviously, they have a bunch of goals here within it. Intergovernmental agency talking about the tokenization of assets and distributed ledger technologies and financial markets. Potential impediments to market development and policy implications. So what's stopping the adoption, right? I'm not going to get too into the weeds here, but there was an interesting chart that I'll go over with you guys. So possible reasons for the absence of a market for tokenized assets: lack of identification solutions and absence of industry standards. 100%. I mean, when it comes to digital identity, a lot of people that watch these crypto videos, and you certainly have the fear mongers out there talking about kind of this oversight into us as human beings and individuals. And digital identity is not just about us. It's about identifying these assets as they do become tokenized, right? If you don't have meaningful identity for something, why tokenize it? Because if you can't identify it, what's the point? And then you get into what can you do with it if it's tokenized, and all the liquidity path finding and all the other stuff that comes along with that. But at the end of the day, like, identity is kind of at the core of all this stuff. We do see a lot more standards coming out, or a lot more technology around identity solutions. You can think of the work that the W3C is doing, kind of the open internet standards body dealing in decentralized digital identifiers, digital identity, all that stuff. So yeah, agree with that. Choice of a DLT network or architecture is another thing that could potentially be stopping a market for tokenized assets. I mean, okay. Either the technology works or it doesn't. We certainly see 15 billion on chain right now with certain networks. Interoperability challenges, I agree with. I'm one to have said this for forever, that I don't think that reinventing walled gardens and weaponizing them with DLT is going to necessarily change anything, nor do I think that's the way that this space ends up going. I think that these networks, the networks that went out will be interoperable on some level. And I think that the assets that get tokenized on these networks will be able to pathfind for liquidity or for whatever they need to pathfind for. So, okay. And we've seen a lot more progress on that, and open standards as well. I can think of DREC, which I just did a video on, for key recovery and password recovery or identity recovery or whatever it is, like abstracting away the layers of complexity with the tech to make it just work. And especially in a way that, again, isn't walled off in certain networks, things like that. Like when I'm talking open standards, I'm not just talking like even Web3 standards. Like, these are going to be open standards that everybody, including crypto native companies and non-native crypto companies, use. And that is the way that DREC's kind of being architected out. I think W3C and the standards that those guys are pushing out around digital identity certainly similar. So the need for payment rails integrated in DLTs and wholesale central bank digital currencies. So wholesale, I used to do a lot of deep divey videos on this between the retail and wholesale CBDCs. Retail would essentially be like you and I transacting in a CBDC, for lack of a better in-depth description, and wholesale would essentially be business to business, or different aspects surrounding that. The need for payment rails integrated into DLTs. I mean, yeah, but I would say that there are a ton of parallel rails that have already been built out. I mean, you can look at what's going on with Quant Network, and the achievements those guys had with the regulated liability network like a year ago, literally sitting on parallel rails with like the Bank of England and Bank for International Settlements, all that stuff. So now that you have these parallel rails, it's like, okay, now we have some regulatory clarity, and this can bridge over, and this can bridge over. These financial transactions, whatever they may be, are going to start using the rails that are DLT, that are quicker, cheaper, more efficient, more interoperable than they normally would be. All the stuff that doesn't have to have pre-existing agreements, or I mean, the Nostro Vostro stuff from what I've heard does have reasons within these institutions for it to be there. But I certainly think that the parallel rails type aspects are already kind of here. It's just more so, when does the regulatory clarity stuff really shake out to allow this stuff to start turning on? Measurable, materialized benefits, investment costs, and lack of scale. Well, I mean, I think that most of us know that have done enough digging in this space probably realize that these traditional institutions and incumbents aren't necessarily the most proactive as far as innovation is concerned. So I do think that a lot of the distributed ledgers that are out there, so these networks, I think a lot of the platforms even built on top of these networks are being tested and trialed out. I don't want to use the word white labeled into traditional systems, but for lack of better phrasing, let's just use that. A lot of the similar platforms that are already on these networks are going to be used. Like, that's why I look at, like, even like, as silly as it sounds, like, even look at like NFT marketplaces, right? There's tons of stuff that an NFT marketplace could be used for outside of just pictures of, NFTs of art. It's like, what does it actually represent? So, yeah. Well, and another good example of that is, I was watching a stablecoin video for trials between like Shinhan Bank and Standard Bank. So really big banks, obviously. And they were doing like trials for stablecoin swaps and all the other stuff surrounding that. And it was a really dry, like, developer video. Nothing against that, but like 45 minutes into that video, you realize that they're using Hashpack on Hedera. Which is like, they didn't build their own wallet instance and then interact with the network. They're using the stuff that's here. Legal issues, ownership, settlement, finality. Okay. Yeah. I mean, that comes with regulatory clarity. Lack of maturity or limited availability of digital asset related services by custodians and the onboarding of assets. I think that comes with a mix of regulatory clarity and more of the large players coming in. So I would say, when you have BlackRock and the Aladdin platform integrating with Coinbase Prime for their institutional investors, like in 2022, and you have Standard Chartered and all these other huge banks, I don't think that the custodianship stuff, or at least the interaction stuff, is going to be as huge of an issue. I do think that, again, stuff like DREC and things like that are really going to help with custodianship of assets and wallet recovery, not just for retail participants, but for enterprises and institutions as well. Open standards, all that stuff. Atomic and programmable settlement. And then the question is T+0 desirable by every market participant? So if you're not aware, and I don't know what they're at right now as far as a lot of these money transmitter aspects as far as the time frames, but there's like settlement times. I want to say a couple of years ago, and I'm probably wrong because I haven't looked into this stuff for a while, but it used to be like T+3 a few years ago, and I think it moved to T+2. I think a lot of stuff is on T+1. Maybe a few things are on T+0. Those are just basically like settlement time. So that's not payment time. Like, if you send a payment, yeah, it goes through, but the actual settlement on the back end of that payment, when does that get completed? And these are in days. So T+2 would be 2 days. T+1 would be 1 day. T+0 would be same day settlement, or when we talk about atomic and instantaneous settlement, that's what you're getting into. And I'm sure there's reasons for certain market participants not to want or not to care necessarily about T+0, but I would say as a whole, atomic settlement would probably be desirable. However, I'm not an expert when it comes to money transmission and all the other stuff along with that. So lack of liquidity and absence of an ecosystem. Okay. I think you know, the crypto market is like sitting at $3 trillion right now. As more and more regulatory clarity again gets shaken out, I think the writing's on the wall with these institutions adopting the tech. The liquidity is going to come. So, all right, that's this tokenization. What's stopping it document that came out of the OECD. Yeah, and again with the regulatory clarity stuff, you know, who knows what's going to happen, but you're seeing news coming out, Donald Trump to issue executive crypto policy orders on the first day in office. Now, that's not to say that you don't have, we've had pushback for years in this industry, right? You have these lifelong bureaucrats like sitting in these positions of power within the House and the Senate and all this other stuff. So, I mean, there's still going to be a road ahead. But again, like I said, I think the writing's on the wall. It'll be interesting to see what Trump does when he gets into office. And it all kind of leads us to, you know, as this technology continues to grow and accelerate and become easier to use, this is coming from the street. This is an article called Why Blockchain Tech Could Be Come Invisible Yet Unstoppable in Daily Life. As blockchain technology moves into the background, which it certainly will, and again, like not having to deal with all the complexities of, oh, I have to write down 24 words, and now I have to figure out how to use this wallet, and now I have to manage 40 discords and 10 telegrams and watch all these YouTube videos and do all this crap. And as identity starts to tie in with this stuff, and as regulations start to come about, and in tandem, the technology continues to get better and better and better. It's literally, and I've fervently believe this, and I know everybody's been saying this for years, but people will be using crypto without even knowing that they're using crypto, or even probably even caring that they're using crypto, other than the fact that, you know, things are just working quicker or cheaper, or maybe they're getting incentivized to. I did an interview today, which I'll show you, with Health Token AI. So it's Jim Nazar and Milan from the Hedera community. And then I did like an all hands space. And they were talking about a hackathon submission that they had, which is, you know, got into like data provenance of your health records and all the other stuff, and how AI agents are going to be interacting within the medical industry. But, you know, the incentivization aspect, as simple as that is, like, you know, how many times do you go to the doctor and they're like, well, how much do you smoke? How much do you drink? All this stuff. And really there's no incentive to get to not drink, or like for a lot of people, or to not smoke, other than the fact that, yeah, I mean, doctors can tell you until they're blue in the face that it's not healthy for you. But at the end of the day, it's like, well, it's still instant gratification, so I'm going to do it. Like, imagine if you didn't do it, and while you weren't doing it, you got rewarded and you didn't even see crypto. You just saw your USD balance and rewards going up, or whatever it is. I mean, that's the level of abstraction of the tech that I think that we're 100% going to get to, as like a really just probably like the simplest example I can think of right now. But I really do believe that this technology is going to operate under the hood of our daily lives. I mean, it's just going to happen. That initial graphic, the adoption of mobile and the internet, right? 20 years and whatever the other one was, 21 years, 15 years, and 12 years, right? You know, we don't think about the complexities of all the technology that's in our mobile phones. We don't think about the complexities that, you know, TCP IP and all the other stuff, and how we're talking to each other on the internet. It literally just works. That is, I believe, 1,000% where the crypto industry gets to. It's just going to work. Here's this space that I did today with a ton of people building on Hedera. You've got Mark and Tyler from Hashpack. You've got Milan and Jim Nasser, multiple different initiatives throughout Hedera. Milan actually has a really cool one. Go check it out. I think it's at NoMidPay, a winning hackathon submission that is essentially like a point of sale terminal that uses DPIN. And it abstracts away. People don't even have to see HBAR. They just It literally can just flow through USD. Everything's in fixed fees. But that was at Health Token AI. You've got Growth. So obviously the first meme on Hedera. Patricia from Centex. I hope I'm not missing anybody there. But I did want to mention, so there's ETFs on the docket for through Canary Capital for Solana, XRP, and HBAR that have been filed applications with the SEC. HBAR Bull, follow this account on Twitter. He does really great interviews, OG and Hedera. He's doing an interview with one of the heads of Canary Capital tomorrow, as well as I believe a senior ETF analyst at Bloomberg. So if you're interested in hearing more about what might be happening with an HBAR ETF or an XRP ETF or a Solana ETF, yeah, definitely pay attention to the HBAR Bull. I did see this video. I guess I'll just mention it. And obviously, this is probably super Bitcoin focused, but I'm sure there's good content in here as well. I watched some of it as far as like, if you want to see how the current financial fiat system works and, hear about basically every fiat currency throughout history kind of dissolving upon itself, and the way that kind of the current architecture works and how just the levels of power that exists within the current financial system. This is a pretty cool video. You can literally probably go on Twitter and just type in what's the problem. And then just for some context here, as we ramp this down, European Banking Authority putting out draft technical standards on the prudential treatment of crypto assets, capital requirements, things like that. So you can kind of see the players that are involved in the regulation discussions. And then I saw this. This was last week, assets under consideration in current products. And I believe Grayscale has had XRP in there, removed XRP. I think XRP is back in there. But you see the other assets under consideration. So these are assets currently in the Grayscale product suite and assets under consideration. From a currency standpoint, looks like they're looking to integrate Caspa potentially, or at least doing some due diligence on it. Smart contract platforms on the left, you can see all the current integrations. You can see on the right the ones that are under consideration, including Hedera, Arbitrum. I'm just calling out ones that I recognize: Ton, Tron, Aptos. Financials, Hyperliquid, which obviously had like a massive run this year. Injective, BNB. Consumer and Culture, Doge and IMX, A16Z. I did not realize they had, or AI16Z. I didn't even realize they had a coin. A16Z, obviously like a big VC-ish firm. Utilities and services, artificial superintelligence, which is like that gigantic merging of the three protocols that happened last year. One of them was Fetch AI. One of them was Ocean, and I'm probably going to forget the third one. I always do. But yeah, cool to see Grayscale looking at these assets. And yeah, I mean, I put out a post and, this is like super common sense, but like, it's just about watching what these big institutions and the people sitting at the tops of these institutions are doing instead of what they're saying. You've got, Jamie Dimon, and this is, you can see right here, the article is more than 7 years old. Bitcoin is a fraud that will blow up, says Jamie Dimon, JP Morgan boss. Jamie Dimon claims cryptocurrency is only fit for use by drug dealers, murderers, and people living in North Korea. You can see it again today, or whenever this came out over the past day or so. Jamie Dimon says Bitcoin has no intrinsic value. And then, you can just look into the integrations that JP Morgan has had with digital assets. And literally just like laugh at the things that this individual is saying, because it's not about what he's saying. It's about what they're doing. The bank's early adoption of digital assets has paid off. JP Morgan's blockchain platform has processed over 1.5 trillion since its launch a few years ago. And the bank estimates that Connexus now handles roughly 2 billion per day. And they're certainly involved in all sorts of aspects within digital assets. So, he said Bitcoin is a fraud that won't pay off more than 7 years ago. And you can look at, not only Bitcoin adoption, but just crypto adoption in general. And it's literally not about what these people are doing. It's about what these, or what these people are saying. It's about what these people are doing. So anyways, I hope you guys enjoyed this video. You know, it's really interesting to see the rate of adoption as far as digital assets and crypto is concerned. 12 years for 300 million users. I'm wondering where they got these statistics. 300 million sounds like a lot, but it also doesn't sound like it sounds like a lot, but I mean, it's obviously nothing compared to how many people are out there and how many people have phones, especially. But also I'm curious if they got this statistic from just like wallets, because if you're getting the statistic from just wallets, people have multiple wallets. There's vaporware wallets that are spun up all the time and all this stuff. So, yeah, I mean, all of this under the context that you can see what's flushing out. It's pretty much right in front of our eyes what's happening right now. We do need to have, you know, some clear-cut rules of the road and regulatory clarity. Obviously, the MiCA stuff in Europe is helpful, but you know, I'm not one to think that, and it's because of like all the research and stuff on here and from everybody else that does great research. Like there's parallel systems in place all over the world right now, and a lot of the stuff that we can publicly see is great. Talking about the regulated liability network, I'm sure Ripple. I mean, God, out of all the banks in the world, how many banks does have RippleNet integration at this point in time? And you know, even all the work that's going on with Hedera. I remember like a redacted document I found out of FTPOS, which is the ACH system in Australia and New Zealand, but I think in particular the integration was Australia. And there was just tons of redacted stuff like from FTPOS about micropayments and all this stuff. Like this was like 3 years ago. So I mean, out of all the public stuff that we see, I can't even imagine the stuff that's kind of under the hood and that we can't see. Like I put out a document. Everybody talks about ISO 20022. But I mean, ISO 24165, I did a video on that, like right whenever Swift had it mentioned in their documentation for digital asset or digital, I think it's digital token identifiers, talking about crypto and talking about it, literally integration of digital assets within Swift for, I'm going to forget what the terminology was, but essentially like I think when the transfers were occurring, and it was in different fiat currencies, there's always like a remainder left over, and using digital assets for that. So not as a bridge asset, but literally as the settlement asset for like the remainders in the fiat that are left over. And that stuff was like a year ago, or like maybe even 2 years ago. So if we don't think that this stuff's happening, it's 100% happening. It'll be really interesting to watch how it flushes out. And that being said, hope you guys enjoyed this video. I will talk to you when I talk to you. Thanks. Bye.